The Federal Reserve just paused on raising interest rates again. Could this come before a storm hit your wallet and the global economy? Find out why this matters now. On April 27, 2026, the Federal Reserve announced it is holding the federal funds rate steady in a target range of 3.5 to 3.75%. This decision marks the second consecutive meeting with no rate changes, reflecting cautious policymaker sentiment amid uncertain global and inflation risks. The rate has remained at this level since March, signaling a pause after previous hikes aimed at curbing inflation. The Federal Reserve is not rushing to adjust rates because they want to carefully evaluate inflation trends and global economic conditions. Policymakers remain cautious given the uneven inflation picture and worldwide uncertainties that could impact U.S. growth. This pause allows the Fed to gather more data and avoid premature moves that could destabilize the economy. While the Fed is holding rates steady now, forecasters and market participants broadly expect potential rate cuts later in 2026. The timing and pace of any easing will be gradual and data-driven, dependent on whether inflation shows sustained improvement. This cautious outlook highlights the Fed's balancing act to support growth without reigniting inflation. U.S. interest rates influence economies worldwide. The current tight monetary conditions, though steady for now, have already slowed global growth. A pause in rate hikes gives some breathing room, but any shifts toward cuts will be gradual. Countries and markets remain watchful, knowing that U.S. policy changes ripple through trade, investment, and currency markets globally. For you, this Fed pause means borrowing costs for mortgages, loans, and credit cards remain elevated for now, but could ease if the Fed cuts rates later in 2026. Keep an eye on inflation data and Fed announcements, as they will impact your wallet, savings returns, and the economy's health. Staying informed helps you prepare for changes ahead. The Federal Reserve's decision to hold rates at 3.75% today signals caution amid global uncertainty and inflation risks. For you, this means steady borrowing costs for now, but watch for possible rate cuts later this year that could impact loans and investments. Stay tuned and subscribe to Daily Q and A to get the latest on how these moves affect your money and the economy.